friends. It's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So if that sounds like you, welcome or welcome back to my channel. If you are a returning subscriber, I want to give you guys a special welcome and just thank you for clicking on this video and deciding to spend some time with the Money Mantra today. Not only is it helping you become a better trader, but it also keeps the content in rotation and pushes it out into the algorithm so that more people can find this channel. If you are a new viewer or subscriber, welcome. Make sure that you guys get comfortable, hit the notification bell so that you never miss when I upload new videos. But even before then, make sure you check out some of the playlists that I have because they are categorized by things like candlesticks, support and resistance, and market structure to help you easily navigate it. Now, if you don't see the type of video that you're looking for, you can always leave me a comment below and I will add your suggestion to the queue. Now, in today's quick video, we're going to be doing a trade breakdown. This is where I go in and backtest or analyze a trade that I posted for the week for some of the people that I am mentoring. Now, this trade was posted on February 16th, 2025, around 7:25 p.m. It was a Sunday, and we were looking at gold. Now, I did recommend that they look for buy limits and buy stops. They also would have had the option to enter market execution, and I gave them a few different I gave them a few different TPs that they could target: 2895, 2900, 2905, and of course higher if they saw fit. I also encouraged them to look at previous lows for stop losses because this is what you want to do for buy trades. And I encourage my students to check their charts and other indicators. And I notated that I was waiting for the stochastic to cross above 20 before I took my entry. So we're going to head over to TradingView and we're going to see how this trade actually played out. I'm going to walk you through my thought process when I entered this trade because it's important to have a process when trading. Something I try to emphasize on my channel is that you don't have to use extremely difficult jargon or lingo for people to understand what you're talking about. I can keep things plain and simple, short and sweet, and you guys will still get the concept. Now, when I am trading, I have a checklist that I follow. I encourage you guys to always have a confirmation checklist because it makes the process so much easier for you. Unless you are back testing viciously all day, every day, there's no reason why you should be spending hours on your charts. You should have a set list of criteria that you're looking for, and this should help you determine if you're going to buy or sell. So we did check the news last night, and there was nothing alarming for this asset. The time was around 7:20 p.m. So the market had only been open for 2 hours. Now, a question we asked ourselves was, is the market trending up or down? If it's trending up, we want to focus on buys. If it's trending down, we want to focus on sells. So we can see that overall, this market had been trending up for some time, and it looked like it was coming down for a potential retest, and that's what I was looking for. If the market is consolidating, you would want to wait for a break of structure or a retest. I see that it already came down to my retest level. So now I will be looking for a break of structure above a previous high. So maybe like right here, since we are looking at this chart on the 15-minute time frame. The next thing that I do in my strategy is I draw my support and resistance lines. And this is pretty straightforward. Support is an area in the market where you can see that it has previously bought, and resistance is a place in the area, a place in the market where you can see that it previously sold. So I can see that it previously bought here, making this a strong area of support here. And if I were to zoom out, I'm pretty sure I can see other places where the market bought at this area. Now, because I'm looking at this trade for a potential buy, I do want to know what those previous highs were simply because these will be my targets for TPs. So I can see that a previous high was here around 2895. I also saw a previous high around 2890. I saw another potential high at 2900 and another high at 2905. Now remember, I did tell my students that they could set multiple highs or multiple TPs because if the market is going to continue to buy, it's only going to target those areas. So after we've set our support and resistance lines, we know where our potential take profit would be, and our stop loss would just be at a previous low. So although the market was around 2882, I set my stop loss around 2875 simply because it was below the previous low. Now, if a market is buying, it should not be creating lower lows. It should be creating higher highs. Let's just look at this section here. We can see that the market was going up. We can tell because there are more blue candles than red candles. And we can also tell that price was being pushed higher and higher. So we can see that price was at 2905. And then eventually price came up to here. And then price was at 2927. And it got even higher. So that's how we know that that is a buying market versus a selling market. We see that this was a high. Let's say price was around 2930, and then price was around 2915, 2905, 2900. So again, because the market is constantly creating these patterns, it makes it a little bit simpler for you to find potential entry and exit points. So that's really all I did. And that's why this step number 5, draw support and resistance lines, is so important because it gives me a guide to follow. Now, another question I asked myself was, has the market hit a session high or session low? Now, it was pretty early in the session to really say if the low had been hit. However, if I was looking at the previous day's low, I can see that it didn't quite get there and price was starting to hover a little bit higher, meaning that in addition to the other confirmations that I see, this was helping me create a bias towards a buy. Now, the last question I have here is, do you have the signal on the stochastic? And remember, in the initial note, I said I was going to wait for the stochastic to cross above 20 because that for me is a great entry signal. So I didn't have that here exactly at 7:15. So we're going to go to the next candle and see what happens. So I do have my stochastic starting to face up, and I need that blue line to be above the orange line. And preferably, if the stock was to cross above 50, that would give me even more confidence in this trade. Because what you're going to notice about the stochastic is that these key levels are extremely important to finding entry and exit points if you're going to be using this indicator. So we can see, for example, the market started its downfall here. And then we can also see that coincided with the stochastic crossing above 80. We can see that the stochastic continued to fall below 50, which is another significant level. And this is where price was tested, but it broke through and continued to push down. And then we can also see that once the market crossed below 20, it was still selling. So I think that the stochastic is a really great indicator. I like to use it for my trades. And this time, in addition to all of my other confirmations, I was geared towards a buy. So that's what I did. I entered for a buy. I set my stop loss at 2875. And then we're going to go ahead and see what happens. Are my TPs going to be hit? So we can see that the market indeed did buy, and my take profit 1 and my take profit 2 were hit. TP3 was hit as well. And ultimately, I believe that this was about 1900 pips secured in this trade from the market execution entry at 2886. So from 2886 to 2905 is about 1900 pips. Please correct me if I'm wrong. I am really bad at math, but I really hope that this video was helpful. I just wanted to highlight how important it is to have a trading process because then you can work through your thoughts a little bit quicker. You don't have to spend all day on the charts. and you're either going to get the answers that you need to take the trade or not. I also want you guys to be mindful that just because you go through your checklist or you have a process doesn't necessarily mean that you're always going to find a setup. That's why it's another reason that it's important to have questions that you ask yourself, because if your conditions are met, then that's awesome. If they're not, you don't have to trade. But if you made it this far in the video and it was helpful, I would really appreciate it if you guys subscribe to the channel. Again, not only is it helping you to stay in the loop when I post new videos every single week, but it also pushes the content out into the algorithm so that more people can find it. But unless you guys have any questions that you can drop down below in the comment box, that's really all I have for you guys today. Until next time, rich friends.